Welcome back to Teshkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, where at the time of this recording we have lost a key area of support at around the $147.9 mark. We have also lost the 20-day MA here on the 4-hour chart, meaning it's now acting as resistance, and now I'm watching our next key area of support at around the $133.2 mark. We have also fully maximized our red target area down here in the formation of this wave 4, and I believe that very soon we might start that bounce to the upside in the formation of this wave 5, and also fully maximize our target areas in the formation of that wave 5. And before I give you my next price targets in the formation of this wave 5, and also give you the worst case scenarios that you can expect here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after making it to an all-time high, we started the bear market where we had been seeing our prices in this ABC corrective structure, which gave us a bear market low at around the $40.1 mark. And after seeing the bear market low, we started a very nice bounce to the upside in a move that has been obeying the Elliot structures, where you can see that I have this Elliot structure in blue, having the wave 5 making its peak at around the $229 mark, and also completed the formation of that first wave to the upside. And after seeing the formation of that wave 1, we started a corrective structure in the formation of this wave 2, which has now given us a low at around the $94.4 mark. And after seeing the low for that second wave, whatever we expect next is a bounce to the upside in the formation of a larger Elliot wave count 3, and sketching out a minimum target area to the upside in the formation of that larger Elliot wave count 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $396 mark, and that is the minimum that I'm expecting that larger Elliot wave count 3 that I'm expecting on the long-term scenarios to do. And in the formation of that wave 3, which is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 3, and that is because of its impulsive nature. And I believe we are seeing such a move right here, where I'm terming that as the first wave, then we have retested in the formation of this wave 2, we have also picked in the formation of this wave 3, and I believe we have also seen the low for this 4th wave down here after fully maximizing our red target area. And there are chances that very soon, as long as we are holding above the key area of support at around the $133.2 mark, there are chances of continuing to push even higher in the formation of this wave 5, and also fully maximize our target areas. And by first showing you that the third wave over here has done the minimum that we expect a wave 3 to the upside to do, by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $162.5 mark. And you can see that here on the charts that we made our peak in the formation of that wave 3 at around the $165.5 mark, and that means we have fully maximized our target area to the upside in the formation of that wave 3. And after seeing the high for that wave 3, we started this corrective structure in the formation of this wave 4, and using the Fibonacci's connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which lies between the $141.1 mark and the $133.5 mark, which is a target area that we have fully maximized by making our low at around the $133.7 mark. And there are chances that very soon we might start that bounce to the upside in the formation of that wave 5, and for that to happen, we need to continue seeing an increase in the buying volume, get above the 20-day MA here on the 4-hour chart, and once we get above the 20-day MA, then that move could trigger an even more impulsive move to the upside, give us a break above the key area of resistance at around the $147.9 mark. And once that happens, then I'll be expecting a retest, and once the retest is in, then we can continue pushing even higher, manage to break above the wave 3 high at around the $165.5 mark. And once that happens, then we can continue pushing even higher to fully maximize our target areas in the formation of that wave 5. And sketching out a minimum target area to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high for that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $229.3 mark, and that is the minimum that I will expect that wave 5 to the upside to do. In this video also, I want to prepare you for a worst case scenario that can only play out in case we lose the key area of support at around the $133.2 mark. So given that we are trading below the 20-day MA here on the 4-hour chart, which is now acting as resistance, we have the risk of continuing to push even lower, get back to the key area of support at around the $133.2 mark, and upon losing this key area of support, that could trigger a move that is giving us the worst case scenarios, where I'll be expecting to see a retest of that key area of support, and once the retest is in, then we can continue pushing even lower, unlocking lower prices, and maybe get us back to around the $110.9 mark, which is our next key significant key area of support here on the charts. And that key area of support, then that will be another key decision point, because upon losing that key area of support, then Quant can continue unlocking lower prices and maybe get us back to around the $100.3 mark, which is our next key area of support. We need to also have that in mind. And for Quant to continue unlocking higher prices in the formation of that wave 5, we need to strictly hold above the key area of support at around the $133.2 mark for us to say that there are chances of continuing to push even higher in that 5-wave structure to the upside to fully maximize the formation of that wave 5 and also fully maximize our target areas. And also taking a look at the indicators here on the RSI, we are trading at around the 43 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 5. And also taking a look at the MACD, on the MACD we have been able to print a bearish cross, and that suggests that there are chances of seeing a bit of a short-term bearish movement. And remember that I have said to you that for us to push higher, we need to continue holding above the $133.2 mark. So losing that key area of support could trigger a massive sell-off here on the Quant chart, and that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios, and I'll be keeping you updated.